Have you ever heard someone say they bought stock in a company and wondered what that actually means? Or maybe you've seen those stock market tickers scrolling across the news and felt completely lost. Well, today we're breaking it all down. By the end of this video, you will understand exactly what a stock is, how it works, and why millions of people invest in them. And don't worry, I am going to explain this in the simplest way possible with real life examples that actually make sense. Let's talk about the pizza shop story. All right, let's start with a story. Imagine your friend Maria has an incredible pizza recipe. We're talking life-changing pizza here. She's been making pizzas from her home kitchen and selling them to neighbors, and everyone is obsessed. Now Maria has a problem, a good problem. She wants to open an actual pizza restaurant, but she needs $100,000 to rent a space, buy commercial ovens, hire staff, and get everything running. The thing is, Maria only has $25,000 saved up. So what can she do? She could go to a bank and get a loan, but then she would have to pay that money back with interest, even if the business struggles. Instead, Maria has another option. She can sell pieces of her business to investors. Here is how it works. Maria decides to divide a pizza business into 100 equal pieces, which we call shares or stocks. Each share represents 1% ownership of the company. Maria keeps 25 shares for herself and sells the other 75 shares for $1,000 each. That raises her the $75,000 she needs. Now, let's say you believe in Maria's pizza skills, so you buy 5 shares for $5,000. Congratulations, you now own 5% of Maria Pizza Company. You're literally a part owner of the business. That's essentially what a stock is, a share of ownership in a company. So what do you get as a stockholder? So what does being a part owner actually mean for you? Well, you get a few things. First, you share in the success. Let's say Maria's Pizza place explodes in popularity. Within a year, she's opened 3 locations and the business is valued at $500,000, 5 times what it was worth. Your 5 shares that you bought for $5,000, they're now worth $25,000. That's the beauty of stocks. When the company grows, your share grows in value. Second, you might get dividends. Some companies share their profits directly with stockholders through cash payments called dividends. So if Maria's Pizza Company makes $50,000 profit in 1 year and decides to give you 20%, you get $500 in your pocket just for owning the stock. Third, you get voting rights. As an owner, you typically get a say in the company's major decisions. Should Maria open a location? Should she start offering vegan option? As a shareholder, you might get a vote on these things. But here's the flip side. If Maria's pizza place struggles and the business loses value, your shares lose value too. If the company goes out of business completely, your shares could become worthless. That's the risk of being an owner versus just being a customer or an employee. So what's the stock market? Now, Maria's Pizza Company is a small private business. But what about huge companies like Apple, Nike, or Coca-Cola? They have stocks too, millions and billions of them. These companies are publicly traded, which means their stocks are available for anyone to buy and sell on the stock market. Think of the stock market like eBay or Facebook Marketplace. But instead of selling furniture and old phones, people are buying and selling pieces of company. The most famous stock market in the US is called the New York Stock Exchange or NYSE. There's also the NASDAQ. These are giant marketplaces where buyers and sellers meet, not face to face, but mostly digitally now. Here's a real example. Apple has about 15 billion shares available. If you buy 1 share, you own a tiny piece of Apple. You're a part owner of one of the biggest companies in the world. The prices of stock goes up and down throughout the day based on the supply and demand, which means if lots of people want to buy Apple stock, the price goes up. If a lot of people are selling it, the price goes down. It's constantly changing based on what people think the company is worth. So why does stock prices change? So what makes people want to buy or sell a stock? Why do prices change? So let's go back to Maria's Pizza for a second. Imagine Maria announces she's creating a new barbecue chicken pizza, and a famous food critic said it's the best pizza they've ever had. People who own shares might think this company is going to make more money now. So they hold onto their shares and they buy more. People who don't own shares yet, they want to get in on the action. All this buying, all that it does is that it drives the price up. But then let's say a new pizza place opens across the street with cheaper prices. Shareholders might worry that Maria's business will lose customers. Some might decide to sell their shares before the price drops. When lots of people are selling, the price goes down. So for big public companies, it's the same concept, but on a much massive scale. Did Amazon just report record sales? Prices will probably go up. Did Tesla announce a recall on their cars? Stock prices might go down, right? Did the economy enter a recession? Lots of stock prices might fall because people are worried companies won't make as much money. The key to understand is this: a stock price is based on what people think the company will be worth in future, not just what it's worth today. So, why do people invest in stocks? In my previous videos, we covered why, but I'm going to recap. So, why do millions of people invest in stocks? There are three big reasons. The first is grow wealth over time. Historically, the stock market has returned about 10% per year on average. That means if you invested $10,000 and left it for 30 years, it could grow to over $174,000. That's the power of compound growth. Compare that to a savings account that might only give you 1 to 2% per year. Why do people also invest? Because it's accessible. You don't need to be rich to start. Many apps let you start investing with just $5 or $10. Apps like Robinhood. You can own a piece of companies you believe in, whether that's your favorite tech company or a sustainable energy business or a brand you use every day. The accessibility is much more easier now in this digital age. And number three, it beats inflation. Inflation means your money loses purchasing power over time. That $100 under your mattress won't buy you as much in the next 20 years. But investing in stocks has historically kept ahead of inflation, helping your money maintain and grow its value. Of course, there are risks. Stock prices can be very volatile. They can drop suddenly and dramatically. That's why most experts recommend only investing money you won't need for at least 5 to 10 years, and also diversifying by owning stocks in many different companies. So, there you have it. A stock is simply a share of ownership in a company. When you buy stock, you become a part owner, sharing in both the profit and the risk. The stock market is where these shares are bought and sold, with prices changing based on what people think the company is worth. Whether you're interested in investing yourself or just want to understand what people are talking about on the news, you now have the basics down. If you found this helpful, give this video a thumbs up, drop a comment below telling me what company you'd want to own stocks in and why. And subscribe for more videos breaking down finance topics in the simplest of terms. I will see you guys in the next session. Thank you for watching.